Okay. Hi, everyone. Good evening. Thanks for joining us here. Tomorrow is a very exciting day because SGX will be launching a new product called Singapore Depository Receipts. And with the new product, you'll be able to trade overseas listed companies on the exchange. And we've also launched, with the new product, the first SDRs will be on Thai underlyings. So that is some of the large blue chip Thailand listed stocks that you'll be able to start trading on the SGX through your new normal platforms, normal brokers, starting tomorrow. So I've got my colleagues here today. Bernice, she is our product manager for the SDRs. She'll be talking a little bit about the product, how it works, some of the key features for you guys to know a little bit more. And then we have Gerald, who is the founder and CEO of Beansprout. It's an independent investment advisory firm. Later on, we also have a Q&A session. So this is the Pigeonhole QR code. Maybe you want to scan that, put in some of your questions along the way. Later, we'll try to address most of them at the Q&A segment. All right. Very interesting market, Thailand. I'm quite excited because some of you guys may have traveled to Bangkok already. You see a lot of the reopening really important. It's coming back. Shopping malls are getting crowded. Yeah, and also Thailand, expected GDP for this year and next year expected to grow at about 3 to 4%. Okay, so without further ado, can I welcome Bernice to talk us through SDRs and a little bit more about the product? Yeah, thanks.
So, hello everyone. Thanks for spending your Monday evening here with us. My name is Bernice. And I am the product manager for the SDRs. So as Emilia has shared, this is a product that will be launching tomorrow. So the first batch of SDRs, sorry. Thank you. So the first batch of SDRs will be on listed Thai blue chip companies, and this is really on the back of a collaboration between the SGX and the Stock Exchange of Thailand, known as the Thailand Singapore Depository Receipts linkage. This was something that was announced back in 2021. It has also garnered support from both our regulators, the Thai SEC and the MAS. So SGX will be launching 3 SDRs at launch tomorrow. So it will be on Airports of Thailand, CPO, and PTTEP. Okay, so before I go on further, I'm just going to take a short pause here for the disclaimers. Okay, here we go. So just a bit of background for everyone on this DR linkage. So basically, it is a collaboration targeted at expanding the investment options for our domestic investors here in Singapore. And it serves to cater to a rising demand for foreign investments by retail clients, particularly into ASEAN markets, where access tends to be more limited because of things like language differences, capital controls, and high transaction cost. So we believe that DRs or depository receipts is an instrument that will allow our investors here to gain exposure to fast-growing companies in this region through a cost-efficient and convenient manner. So the model of a DR linkage is fairly simple. So if you look at the diagram on the right, it actually entails a cross-exchange issuance of depository receipts by an intermediary that's known as a DR issuer, and the liquidity of the DRs on the markets will be facilitated by a market maker. So through this linkage, investors will be able, in Singapore, will be able to access Thai underlying DRs on SGX and vice versa. So next, I wanted to talk through the key value propositions for the SDRs. So first of all, investors can gain access into foreign companies through SDRs via a single marketplace, which is SGX. And that actually takes us to the second benefit of cost simplification, because these SDRs are traded on SGX and traded locally. Local brokerage and exchange fees will apply, and they tend to be much lower and more cost efficient than trading directly overseas. So trading of SDRs is also convenient for investors because they are traded, cleared, and settled in Singapore dollars in accordance to SGX market hours. So Sing dollar trading actually provides price transparency and certainty for investors at point of execution. This is actually different from when you are investing directly overseas, where your FX rate is actually known post-execution. The SDRs are also custodized with the CDP, so investors will be able to view your aggregated holdings across the SDRs and other SGX-listed securities via our investor portal. So the fifth on flexibility is one of the core features of the product, where it allows investors to switch the SDRs for the underlying instrument if they wish to do so. And last but not least, on transparency, the SDR issuer is actually required to make announcements on corporate actions relating to the SDRs on SGX. So you will be able to access these announcements on SGX's website, similar to what you do today for other SGX listed instruments. So next on, I'll go a little bit more into the features of the SDRs that will be traded on SGX. So on the left half of the slide are the generic features of the SDRs, while the right half of the slide are characteristics that are specific to the Thai SDRs that we'll be launching tomorrow. So what are SDRs? So basically, these are instruments that provide holders with beneficial interest in an underlying security. The SDRs are issued on an unsponsored basis by an intermediary known as a SDR issuer. So unsponsored basis meaning the SDR issuer does not have any relationship or formal agreement with the underlying company. So the underlying company is not involved in this issuance at all. So in the case of the Thai SDRs, our first issuer will be Philips Securities, the local broker that some of you may be familiar with. So structurally, the structure of SDR is fairly straightforward. So each SDR is actually represented by a fixed number of security that is listed on an overseas exchange. So these underlying securities are held on trust for SDR holders with a custodian in the underlying market. And in particular, for the Thai SDRs, the underlying instruments will be non-voting depository receipts, or NVDRs in short, on shares of a company that's listed on SET. So NVDRs do not carry any voting rights, so SDRs will not carry voting rights as well. Okay, moving on to the rights of an SDR holder. Broadly, two key rights. One is the right to exchange the underlying securities, the SDRs for the underlying securities, and this can be done via a process called issuance and cancellation, which your brokers should be able to facilitate for you if you wish to do so. The second is the entitlement to corporate actions. In this case, the SDR issuer will use reasonable endeavors to pass on the entitlements that it receives on the underlying instruments to SDR holders here in Singapore. So in the case of the Thai SDRs, they are convertible with the underlying NVDRs, and in general, any cash distributions will be made in Singapore dollars. Last but not least is on investor eligibility. So the SDRs are classified as excluded investment products. So that means these are plain vanilla products that will be traded in the same way as any other listed shares on SGX, and they are tradable by all investors. Okay, the other key area that I'd like to touch on a little bit is actually on corporate actions. So in general, the SDR issuer will pass on benefits of a corporate action to holders here in Singapore. So whenever the underlying company makes an announcement on a corporate action event that results in any form of distribution, the SDR issuer will actually make a corresponding announcement on SGX to inform the market of how it intends to handle the CA event for the SDRs here. So the announcement will set out the key information such as record date, the payment amount, and the FX used if relevant. So investors can look out for these announcements pertaining to their SDRs via the SGX company announcements website. So do note that the payment date for distributions relating to the SDRs will always occur later than the payment date that is set by the underlying company in Thailand. So the table on the screen sets out some examples of how the SDR issuer may treat the different types of corporate action events. So generally, for example, for mandatory events, say a dividend payment or a bonus issue, the SDR the SDR issuer will pass on these benefits, either in the form of cash or additional SDRs to holders here in Singapore. For voluntary events, for example, rights, there are a couple of ways that the SDR issuer can choose to handle these events. One includes selling the rights and distributing the cash proceeds to holders here. Two, if the rights are non-renounceable, meaning they can't be traded on the secondary market, the SDR holder will facilitate or try to facilitate, if practicable, the rights issue subscription in Singapore for SDR holders. If it's not practicable for them to do so, then potentially the rights will be allowed to lapse. But in this case here, in the event where the SDR holder wishes to participate still in the corporate action, say a voluntary event, there is always an option of converting the SDRs into the underlying instrument and participating in the corporate actions in the underlying market directly. Okay, so moving on to the trading parameters for the SDRs, we do have a fixed naming convention to make it more easily identifiable. So you'll go by the name of the underlying company, followed by a 2-character identifier of the underlying market, which will be TH for Thailand in this case, followed by SDR. So in general, the SDRs will be traded, cleared and settled according to CDP and SGX rules, and the regular exchange fees will apply. The Thai SDRs will trade in Singapore dollars during Singapore market hours, and the standard minimum bid schedule and bought lot size of 100 will apply as well. In terms of settlement cycle, it will settle on a T+2 cycle, similar to all the other listed securities that we have on exchange today. Okay, the last 2 slides that I have is where investors can actually find resources on the SDRs and the underlying company. So for one, each issuance of SDR is actually backed by or accompanied by a program disclosure document which sets out the T's and C's of the SDR. So this set of documents will be available on the SDR issuer's website or SGX's product page. For more information on certain events relating to the SDRs, for example, for corporate actions or if there were material changes to the T's and C's, these will have to be announced on SGX's website, which you will be able to access through our company announcement page. Additional educational resources on SDRs, so we have investor guide, product fact sheet and infographics that's up on our SGX product page. There are also analyst reports from various broking houses on the 3 underlying that's been hosted on the SGX analyst research page as well. So for those who are keen, please visit these pages. And also last but not least, our academy event. So this is the first of a series of very exciting academy events that we have lined up on the SDRs and the Thai market. So please feel free to look up and sign up for them via the academy link. For more information on the NVDRs and the underlying instruments, you will have to look towards the webpage of the Stock Exchange of Thailand for those information. Do note that the underlying companies are not regulated by SGX, so they will not publish any announcements on SGX. They are required, however, by the SET because due to their listing obligations to make certain disclosures on the SET's website, and these disclosures are all made in English, so you can find out more information from there. Okay, last but not least, just a couple more important information about the product. So these SDRs are traded on SGX ST, and that investors will have no interaction with any overseas exchange or brokers. The quotation of the SDRs are also subject to our approvals. It doesn't indicate any merit of the foreign listed company, and SGX does not regulate these underlying companies as well. So for more information on the product, please look up our product page, sgx.com/SDR. So this is the end of my product introduction. I'll hand over to Gerald to share more about the Thai market outlook and the 3 underlying companies. Thank you.
Hi everyone, good evening. Hope you have had your dinner. My name is Gerald. I'm the founder and CEO of Beansprout. We are a MAS licensed investment advisory platform, and what we want to do is to help you to make better financial decisions. So whatever you see on the presentation today, you'll be able to find it on our website as well. And what we want to be able to do is to help you get a better understanding of this Thai SDRs, as well as what are some of the investment merits of this underlying. Okay, so I'll go through a short presentation, and then if you've got any questions about the companies, about the industry, feel free to visit this Pigeonhole site, and we'll be taking your questions later. Bernice has shared her disclosure, but I need my own disclosure as well. So whatever that's being shared today is for education purposes only. It should not be taken to be financial advice. Okay, so what will we go through today? Over the next 20 to 30 minutes, what I want to do is to bring you to Thailand. We'll talk about different industries so that you can understand a lot more about these companies that are going to be available for you to invest in via the SDRs. So we'll start by going through what is the Thai economic outlook. So from a very top-down basis, understand what is happening to the economy. Next, we'll go into each of these underlying and understand what these companies actually do, what is their company background, and what does their outlook actually look like. Last but not least, we'll take the questions that you have. Okay, so we'll start from the top down since you might be very familiar with the Singapore economy, you might have visited Thailand often, but you might not know how the economy actually works, what are the outlook actually like for the different parts of the Thai economy. Okay, so first and foremost, if you take a step back and try to understand why do we actually want to look at investment opportunities in Thailand and within ASEAN? Why do we have to look outside of what we are already very familiar with in terms of the Singapore REITs, maybe your Singapore bank stocks, and even spend the time tonight to actually look at Thai SDRs? This is because if you look at this chart here, this is effectively what the IMF expects in terms of your GDP growth this year. What you see here is that the ASEAN 5 economy, and that would include Thailand being one of them, actually has got a much higher GDP growth prospect compared to most of your other advanced economies. If you were to look at Singapore, the MTI is forecasting that GDP growth this year will be between 0.5 and 2.5%. So if I take the midpoint, that's at 1.5%. So maybe if you were to look at some of the Singapore stocks, they might not be able to offer you very high growth opportunities, even if they're able to give you a very good dividend yield. If you look at advanced economies, we have seen all the headlines around what is happening in the US. We have seen what is happening to Europe. There's all the concern about economic slowdown because of the very high interest rates. So the GDP growth is still fairly lackluster. You're looking at 1.3% for advanced economies, and in the US, 1.6%. Okay, so if you move up, if you look at the global economy, that's at 2.8%. And why has it been put up compared to some of the advanced economies? That's because a lot of the emerging economies, such as the ASEAN economies, are actually expected to grow at a much faster pace compared to your advanced economy. So that actually presents investment opportunities for us as investors, because we can then find ways to tap on this very high growth potential. Okay, so if you drill down and look at Thailand, what we saw is that if I go back a few years ago, 2020, because of COVID, the GDP actually shrunk by 6.2% back in 2020. So that has actually started to recover. By 2021, you're looking at growth of 1.6%, and then by 2022, another 2.6% growth. That growth momentum has actually continued into the first quarter of this year. We are looking at 2.7% year-on-year growth in the first quarter of 2023. Okay, so why do we see such a strong fall in your Thai economy back in 2020, and why such a strong recovery? That is because tourism is a very big part of the Thai economy. I'm sure many of us here have visited Thailand probably sometime over the past few years. But what we may not have realized is that it is an economy that is very dependent on tourism. So if I were to look across a lot of different countries, you would think that, oh, actually a lot of people like to visit the US, UK, go and do their shopping in some of these markets. But actually Thailand is the one that has got the largest share of their GDP coming through from tourism. Okay, so 12% is actually a very high number. If you look at South Korea, like a lot of us like to go there, visit the various sites that the K-pop stars are also doing their filming, it's actually only 2%. If you were to go to Japan, that is 7% of their entire GDP coming through from tourist arrivals. So Thailand really stands out in terms of its dependence on tourism, which is why we saw the very sharp decline back in 2020 and also the strong recovery thereafter with the global reopening. So what is the outlook like for tourist arrivals into Thailand this year? Okay, if you are in Singapore, you have seen that there has been a very strong pickup in terms of your tourist arrivals. If you're having dinner at Lau Pa Sat just now, you have realized that, oh, actually, most of the people eating there are actually tourists. You also see that same phenomena in Thailand. So back in 2020, we saw the very sharp dive in terms of the tourist arrival numbers to about 6.7 million. And in 2021, it did even worse, just 0.43 million people. That started to recover in 2022 after it gradually reopened its borders in the second half of this year. And what they are expecting this year is that it will go back to 30 million tourist arrivals. Just to give you a bit of benchmark, how big or small this 30 million number is, for Singapore, the STB is expecting that the tourist arrival this year will be about 12 million. So the total number of tourists going to Thailand is close to 3 times that of what we see in Singapore. Okay, so using that as the backdrop on the economy, we'll go down and look into 3 of these underlying stocks and understand how they can be positioned in different parts of the Thai economy. Okay, so we'll start by arriving in the Thai airport, and the first stock that we'll talk about is Airports of Thailand. Okay, it will trade under the stock code of TATD. Okay, so Airports of Thailand actually operate 6 key airports in Thailand. If you had visited Bangkok recently, you would probably have stepped into one of their assets, which is the Suvarnabhumi Airport. Okay, so maybe you can have a show of hands here who has been through Suvarnabhumi Airport in the last 3 years. Okay, so quite a number of you have actually been there. So if you want to actually get exposure into the growing traffic towards the airport, then AOT would actually be a stock that you can consider. Okay, but what is important to note here is that it not only operates the key airport in Bangkok, but quite a number of other key assets in Thailand as well. So if you are taking a budget flight, you probably have landed in Dong Mueang International Airport. If you're taking Scoot, so that is operated by AOT as well. If you decide not to go to Bangkok, but you decide to take a beach holiday in Phuket, that is operated by AOT as well. If you decide to be a bit more adventurous, going to Chiang Mai, Chiang Rai, Hat Yai, those are all also operated by Airports of Thailand. So you can see that it has actually got a very strong foothold within the whole airport sector in Thailand. Whether you're flying into Bangkok, Chiang Mai, Phuket, all of it would effectively be tied to AOT. Okay, so in total, there are 39 airports in Thailand. That is the map on the left. AOT operates 6 of them, but even by operating 6 of them, they actually have over 80% of Thailand's air traffic. That is because a lot of the key airports, such as the Suvarnabhumi Airport, would be operated by AOT. Okay, so that would be a very key thing to know about what AOT actually does. So here we see the passenger volumes for AOT, quite similar to what we saw for the entire Thai market in terms of the tourist arrivals, where we saw a very sharp fall after COVID in 2020. And only in the second half of 2022, we started to see a recovery. But even with the recovery, we are not anywhere close to where it was prior to COVID. In fact, we are now still 30% below where it was before COVID. So this effectively presents the potential room for it to be able to further grow the passenger volumes. Okay, and why do we actually not have the full recovery in terms of the tourist arrivals as yet? If we're to look at the breakdown of the tourist arrivals coming into Thailand, what we see is that the Chinese tourists represent a very big part of all the tourist arrivals. Based on the 2019 numbers, once again, before COVID, it would represent about 33% of all tourist arrivals. So what we know is that, okay, so China has now relaxed some of its border restrictions. Some of the tourists can start to go out of the country, but they are definitely not back in full force as yet. So that is the key reason why we don't see AOT's passenger volumes being back to the pre-COVID levels as yet. Okay, so the potential room for it to see a further volume growth will come through when all of these Chinese tourists start to go back to Thailand. Okay, also just to give you a bit of perspective how big or small this 33% number is, it is significantly higher compared to Singapore. If you think that there are already a lot of Chinese tourists coming into Singapore, then the number I want to share with you is that actually Chinese tourists just make up about 20% of Singapore's tourist arrivals, but 33% for the entire country in Thailand is actually a very high number. Okay, so that effectively would be the potential further upside in terms of where the other tourist arrival growth could come through from. Okay, so how will AOT actually benefit from the improvement in tourist arrival numbers? So this is a breakdown of its revenue back in 2022. The key thing to note for AOT is that the year end is September, so we are looking at the 12 months ending September 2022. So you only have got 1 quarter of the recovery coming through from the reopening of the Thai border. But even then, if you look at the departure passenger service charges, which is what it earns when tourists actually fly out from the airport, both internationally and domestically, it will represent 32% of AOT's revenue. Okay, so even with 1 quarter of the improvement in tourist arrivals, you already see that AOT is able to have 32% of its revenue coming through from this departure passenger service charges. Okay, next, where else would AOT get its revenue from? Another big part will be the concession revenues, which is the dark blue column. And what are these concession revenues? So if you go to their airport, you'll see the duty-free stores, you have the F&B outlets, just like you have in Changi Airport. The key difference is that if you go through Changi Airport, and if you're familiar with the Singapore company called SETS, SETS actually does not own Changi Airport. It just operates within Changi Airport. It does not have the ability to lend out the space to the duty-free stores and earn a revenue from that. But what AOT is able to do is that it's able to earn a revenue by renting out the stores at the airport to the duty-free store. So that provides an additional source of revenue for AOT. So if we look at the revenue, a big part of it will come through from this improvement in tourist arrival numbers, or being able to rent out the space at the airports to these duty-free companies. Okay, so how does this actually translate to the profit of AOT? If you look at the revenue, we already saw a very big improvement in the first half of their fiscal year 2023, which is the 6 months ending March this year. If you look at the revenue, it is now at about 20 billion Thai baht, and that is a sharp improvement from the 5.6 billion in the first half of fiscal year 2022. So with the gradual recovery in the tourist arrival numbers, we have started to see an improvement in AOT's revenue, but definitely not close once again to where it was prior to COVID. If we were to look at the profit, the improvement in revenue has also translated to AOT now being able to generate a profit in the first half of its fiscal year. So that will reverse the loss that actually made in 2021 and 2022 because of the lockdowns that we saw and the restrictions that we saw in terms of tourists arriving into the various Thai airports. Okay, so that is a brief introduction to Airports of Thailand. Effectively, what it does is to offer you exposure towards the improvement in tourist arrivals in the whole of Thailand. Okay, so after having arrived in Thailand, you probably want to go about doing your shopping. You'll be walking around the streets, and you'll probably see this very familiar store, which is 7-Eleven, one of the convenience stores in Thailand, where you want to be grabbing a bottle of water because it's so hot, or a can of coconut juice just to be able to quench your thirst. So then the question is, who actually would be the one that owns the ability to run these 7-Eleven stores? And the company is CPO, which will trade under the Thai SDR code of TPCD. Okay, so CPO is also another major consumer company in Thailand. It operates more than 14,000 stores. Okay, so this will come under the 7-Eleven brand, and it can either be something that the company runs by itself, which we call a corporate store, or through a franchise model, and that will be called the franchisees, which is the dark blue bar. Okay, so quite evenly split between what it owns itself and what is actually done through a franchise model. And together we see that they have a dominant share in the Thai convenience store market. Okay, so if you look at the chart on the right, okay, 7-Eleven would have a 41% market share amongst all convenience stores in Thailand. And if you've been to Thailand, you know that there are a lot of convenience stores around. Basically, every street that you go to, there'll probably be 2 convenience stores within the same street. So having 41% stake in the whole Thai convenience store market is actually very significant. Okay, but the other thing I want to point out here is that because CPO owns a number of different retail companies and brands, the Lotus Go Fresh convenience store brand is also owned by CPO as well. Okay, so when you combine the Lotus Go Fresh brand and the 7-Eleven brand, effectively CPO would have a very dominant 73% market share within the whole Thai convenience store market. Okay, so your next question would probably be, oh, how are Thai consumers doing? Are they spending as much as what we see in the Singapore market? And here what we see is the chart for retail sales, particularly for convenience stores, okay? So this would take out all the things around like departmental stores, F&B, and we just look specifically into convenience stores. Okay, so what we see here is that in the past few quarters, particularly in 2022, the retail sales growth for convenience stores has once again been very strong. In fact, in the third quarter of 2022, it actually was an increase of 16% year on year. So this would actually be higher than what we see for the entire economic growth of Thailand, because the Thai retail is actually a very big part of your entire economy. Okay, so if I were to look at a company that owns retail stores, the question would be, what would drive the earnings of this company? So naturally, one way to be able to bring in more revenue, be able to deliver more earnings for us as shareholders would be if they are able to open more stores. So what we see here is that CPO has been able to consistently open more than 700 stores per year. So effectively, if you're buying into the SDR of CPO, you will effectively be owning exposure into a company that's able to consistently open up stores of more than 700 per year. So far this year, it's already opened more than 200 stores in the first quarter of this year. So it's actually on track to once again be able to open another 700 stores this year. Okay, so this is one big part of how it is able to generate a higher revenue and profit for us as shareholders. Okay, so apart from opening stores, the other way that these companies will be able to bring about a bigger profit would be if they are able to generate a higher revenue per store. Okay, so we not only want these companies to be able to open more stores, we also want them to be able to bring in more revenue per store. So what we see here is that in 2020, because of COVID, the revenue per store came down. This is because people were spending more time at home. They were not out on the streets that often, and hence not buying as many things from your convenience stores. Of course, your tourist arrivals fell in the Thai market as well. So together, that actually led to close to 20% decline in your average daily revenue per store between 2019 and 2020. But by the time it was 2020, as the economy gradually reopened, as people started to go out more often, the average daily revenue per store started to pick up as well. And that pace has actually continued into the first quarter of 2023. But once again, what is important to note here is that even with the improvement that we saw in the first quarter of this year, it is still not back to where it was in 2019 as yet. So 2019, it was about 83,000 Thai baht per store. Now we are at 79,000 Thai baht. So where is the missing revenue actually coming from? Earlier we shared that the tourist arrivals in Bangkok and in Thailand are not back to where it was prior to COVID as yet. So once again, with the recovery in tourist arrivals, as your Chinese tourists start to come back, then there's scope for the average daily revenue per store to improve to be closer to where it was before 2020. Okay, so if you were to look at the revenue breakdown of CPO, the convenience stores would be a very big part of its revenue, representing about 41%. This would be coming through from its very dominant position within the whole convenience store market in Thailand. But apart from this ownership in the convenience stores, it is also exposed to the wholesale market as well as the retail market. So wholesale market will be the larger concept stores where you'll be able to buy a larger variety of things in these stores. And your retail stores will effectively be the grocery stores that you might be familiar with in Singapore, the likes of your Sheng Siong, the likes of your NTUC. CPO actually has got ownership in these brands as well after it acquired a few companies over the last 5 years. So what you effectively get with CPO would be a diversified exposure towards the whole consumer market in Thailand. And as the retail sales continue to pick up, as the Thai consumers consistently spend more with time, with their growing income, then there's scope for CPO to be able to benefit from these trends. Okay, so in terms of how it translates to the revenue, once again, what we see here is that CPO's revenue has grown between 2020 to 2022. That really came through despite COVID because it made a few acquisitions. I shared earlier that it has expanded into being able to also sell groceries, also being able to sell some of your goods in the larger concept stores. So with the acquisitions that CPO has made, it's been able to grow its revenue consistently between 2020 and 2022. If you were to look at the profit, what we see here is that even though the revenue did go up, the margin did come off a bit because of the higher interest expense that it has to incur because of the various acquisitions that it made. So in terms of the earnings, it is less volatile compared to AOT. At least it did not swing into losses because consumer spending is something that is more resilient compared to the tourist arrival. But at the same time, because of the higher finance expense, the profit did come down a bit over the last 2 years. Okay, so CPO is effectively a name that we can consider if you are looking at the general consumer market in Thailand, if you want to get exposure towards the rising retail sales in the entire market. Okay, so last but not least, we come to an oil and gas company, PTT Exploration and Production. So having done your shopping in Thailand, having gone to the convenience stores, you probably want to be taking a Grab ride towards your hotel to get a rest. And then the oil would effectively be from oil field that would be explored and produced from PTT EP. Okay, so that's how you can potentially think about all the different three names that we have discussed today. Okay, so PTTEP, in a very simple way, it is an oil and gas producer. So where it generates the bulk of its revenue from, it is really from being able to sell liquid, which is oil, and gas, which is your LNG. Okay, so this would be the things that would be in PTTEP's product pipeline. And in terms of where it actually sells these products to, Thailand would once again be your key market, representing 60% of your PTTEP sales. Apart from that, it also sells this oil and gas to other parts of Southeast Asia, as well as the rest of the world, which is mainly the Middle East. Okay, so as an oil and gas company, what we are very interested to know would be where are its oil and gas assets. Okay, so for PTTEP, it has got a significant portion of its assets sitting in Thailand, so close to half of its oil and gas in Thailand. But outside of Thailand, it also has got assets within Southeast Asia. So how some investors actually see it is that it is one of the largest oil and gas companies within the whole of Southeast Asia. Okay, and then it has got some assets in Africa, in the Middle East as well, but that would represent a smaller part of its entire book value of assets. Okay, so how much is the Thai economy actually dependent on PTTEP? Okay, so if you look at the total domestic production volume, so this is all the oil and gas that's being produced in Thailand, PTTEP would be the one that predominantly contributes all of this oil and gas production. So more than 60% of the oil and gas coming out of Thailand would actually be from PTTEP. Okay, so the economy is very dependent on this company. Outside of this, there are some other companies like Petronas, Chevron that you might be familiar with. But if the Thai economy needs energy, it would have to be dependent on PTTEP. Okay, so what we are very interested to know for oil and gas companies is what is its cost of production. Because these oil companies cannot decide what is the price that they are able to sell the oil, the gas at, but what it can effectively control would be its cost of production. And the lower the cost of production, the more the profit is able to generate based on the existing level of oil and gas prices. So if you are a very low cost production, such as the ones in the Middle East, you might have a unit cost that's below $10 per barrel. So if oil prices is at $70 per barrel, for every additional barrel that you're able to produce, you're able to make $60 per barrel. So what we see here is that the unit cost of PTTEP is actually fairly low at about $28 per barrel of energy. Okay, so if we compare that to what is the average price that it has been able to sell the oil and gas at, in 2022, the average selling price was at $53 per barrel of energy. So given the production cost of $28, the difference in it would effectively come down to the profit of PTTEP. So effectively what this company would consistently be trying to do would be to be able to lower its cost of production. And that's the $28 per barrel number that we are looking at. What we have seen over the past few years is that it's been able to bring down this number and be able to keep it below $30 per barrel. At the same time, it will want the ability to sell the oil and gas at a higher price. That's not something that the company is able to control. But if we see that globally there's an uptrend in oil prices, there's an uptrend in gas prices, then PTTEP will be able to make a higher profit. Okay, the other thing that we are very interested in for oil and companies is how much reserves does it have? Because we don't want to invest in an oil and gas company where the oil reserves are actually running out, and then as shareholders of the company, we end up with a company with no assets at all. So what we see here is that the reserves of PTTEP has actually been growing up over the past few years. The analysts would want to group them into two different kinds of reserves. One is something that is already proved, so proven that the oil or gas is definitely sitting in the oil field, okay? So that is the proved reserve. Just with this proven oil reserves that would last about 7 years, so that is a considerable amount of time. If we add in those that are probable, so not 100% as yet, but based on what studies that they have done, research have done, some of the initial drilling and exploration activity, then the total reserve life actually increases to 11 years. So what we want is a company that has got the sustainability and visibility on the oil reserves so that as shareholders, we are able to benefit from the oil that is being produced by this company over the next few years. Okay, so I've gone through the different companies. So for the different companies, you have seen some of their investment merits and why investors might be interested in these different stocks. Just wanted to touch a bit about the risk of investing in these companies. The first one, which is important to highlight, is just the foreign currency exchange risk. For many of the investors here who might already be familiar in investing in Singapore listed stocks, this might be something that you don't think about as often because a lot of the names that we are familiar with, like your Singapore banks, your REITs, most of their revenue is generated in Singapore, and hence the foreign currency exchange rate risk is not as significant. But if we are thinking about investing in Thai SDRs, then this is something that we can potentially bear in mind, especially given the strength in the Sing dollar that we have seen over the last few years, not just against the Thai baht, but across a number of different currencies. So if I'm doing my retirement planning and thinking about how much Sing dollar I need to have at 65, 70, then the currency exchange risk will be something to take note of to make sure that I have sufficient Singapore dollar savings for my retirement planning. Okay, so in summary, what we have gone through over the last 30 minutes is that why are we interested in the Thai SDRs is because ASEAN is expected to grow much faster than the rest of the world. So that presents growth opportunities for us as investors. Particularly for the Thai economy, we have seen how it has suffered because of COVID and the fall in tourist arrivals during 2020. But then on the flip side, with the recovery and improvement in global air travel, then Thailand will be one of the economies that will benefit from that as well. So what Thai SDRs actually do is to offer you access to these Thai blue chip companies in a lower cost and convenient way. So as a recap, the three names that we went through: Airports of Thailand, stock code TATD. Effectively, this will be for investors who are interested in the recovery in the Thai tourism sector. CPO under the stock code TCPD for investors who are looking at the structural growth coming through from the Thai domestic consumption. And for PTTEP, the oil and gas company that we discussed, if oil prices go up sharply, if gas prices go up very sharply, then this is a company that can potentially benefit. Okay, so I've gone through the presentation. If you'd like more resources, do visit our website, growbeansprout.com. Join our Telegram group where you can have more active discussion with the other community members, or visit the SGX SDR campaign website.